The last piece of news I expected was this change in leadership at Verizon. The company had really been sort of, prepping the head of the consumer business, or grooming is a better word, Ryan Sampath, who is just a phenomenal talent, in my opinion. And he's been sort of pushed out there doing a lot of investor conferences and giving the investment community the impression that he was the next in line. So when the news broke this morning that Dan is taking over as CEO, it really surprised a lot of people, including me.
So what's the company saying here? Why do you think they chose this outsider versus somebody that, again, an insider that maybe the street thought was going to be the next in line?
You know, I think for telecoms, all three of the majors, the wireless business is slowing very rapidly on them. We're seeing subscriber growth down a lot this year. There's a lot of pressure on pricing. And I think the thought is Dan Schulman used to be CEO of PayPal. He's got experience at Amex in the consumer finance business. So they're thinking in terms of how to monetize the 150 million consumer relationships they have to move into adjacencies. The naming of Schulman, in my mind, tells me they're looking to tap the consumer finance market. You know, they've already got a credit card business. I think it's probably doing pretty well, but they're not actually in the loan business there. But they're doing a lot of device financing. And so I think the hope may be, this is my speculation, may be that they can take that perhaps a step deeper into the consumer finance market and maybe other adjacencies to be able to monetize that base a little bit more and diversify away from the slowdown in wireless.
Yeah, no, Verizon, they've kind of dabbled over the years in other businesses, purchasing AOL and Yahoo. So what's the focus going forward here? Is it to try to just manage the wireless business as, the decline in the wireless business as best they can?
So again, it's the strategy here, Paul, I think, is to sort of build off that base that they have. The wireless business is stable. It's not going anywhere. It's typically a GDP plus business. Again, we're seeing a slowdown now, so it could move down to a GDP-like growth rate. But again, it's all about extensions. So all three of the majors here are pushing hard into consumer broadband. They're doing very well there, both in the fiber and the fixed wireless access business. But even that business is starting to mature a bit as it saturates here in the U.S. So the question becomes, what's next? And maybe the what's next could be consumer finance. If you look at T-Mobile, they've tapped the outdoor advertising market, which actually is growing double digit. I never would have guessed. But
Yep.
The thought is, hey, as people carry around these phones, we know where they are. Perhaps we can leverage that and come up with very innovative ways of increasing eyeballs on our outdoor advertising. So I think they're looking for that type of creative thinking to come up with new ways of generating growth. And again, you're trying to leverage that huge core base of wireless subs that you have.
Just looking at their balance sheet, John, this is company Verizon's got $170 billion of total debt there. How does the market feel about their balance sheet?
So I think of the big three, Verizon is probably at a point where they want to be in terms of financing the business. Can they load on a bunch more debt? It's hard to say. I'm going to defer to our credit analyst for that, Steve Flynn. But I don't view their ability to finance new ventures as an issue here at all. It's a very cash-rich business, wireless,
Yep.
that is. And, I think that will allow Verizon to bankroll any of the new ventures they plan to push into from here.